Hello, welcome to this video. It's me, I'm the HusniFX mentor. Welcome to HusniFX price action course again. This video I'm going to talk about supply and demand zone. In this video I'm going to explain, as I told you in the first, supply and demand zone trading in detail. Please watch and read what I'm just explaining on these slides, and also watch our previous articles or videos which I have explained it and discuss it how to trade with the sideways price action area. As a part of this video, I'm going to explain the value pointers which are related to supply and demand zone trading. So the outline of this video is the structure of the price action, or the price of the market. Let me say the structure of the market, and in total we need to understand what the structure of the market is. We will also learn what is the supply and demand zones are, and we will also learn how to find a supply and demand zone, and also the different types of zones, how to measure the strength of zones, when did the supply and demand zone break, and how to break with the supply and demand zone. So the structure of the price, or the structure, let me say the structure of the market, the price goes through the following phases. We have to understand these things: accumulation period, reaccumulation period, uptrend, and also distribution, and also redistribution or downtrend. Let me illustrate it to you, and so that you will understand. This is what the accumulation should be. This is the accumulation, and this is the uptrend, or what we call the trend up, and this is what you can see, the supply zone. So the accumulation period, we call on this zone demand zone, and in the distribution period we should call it supply zone. So when you see this is reaccumulation zone. As you can see that the market was buying from here, and then you can see that there was rejection, which we call the distribution period, and then you can see that the market has started to go up, which will be the accumulation period. So here is redistribution, as the market started to distribute from here. So anytime the market started to go down, it is just making some redistribution. So anytime the market is making new reaccumulation, it wants, then it has to go. So the accumulation zones, when you see the HFX BA is removing the floating supply of a market by buying or stock anything. This process we should call it accumulation. So whenever trend up, for example, we are aggressively moving price up. So the distribution, whenever see the HFX BA, this means HusniFX price action will take advantage of the higher price obtained in the rally to take a profits by beginning to sell the market back to the uninformed traders or investors. Laws of supply and demand trading. All financial markets work on the value universal law of supply and demand. The law of demand means the higher the price of an item, the fewer the demand buyers don't want it to buy at a higher price, and lower the price, higher the demand buyers wanted to buy at a lower price. And when it comes the law of supply, the higher the price, the higher the supply, or sellers wanted to sell at a higher price, and lower the price, lower the supply, sellers don't want to supply at a lower price. I think in a concept you are just to understand basically the laws of supply and the demand trading. So in this picture you can see what are the supply and demand zones are. Supply and demand, nothing but the border area of support on resistance. Let us know analyze gold daily time frame. On here you can see that here we have the supply zone, and we have also another supply zone. We have also another supply zone. We have also demand zone, and we have also demand zone. I hope when you watch a video about how to identify the supply and demand zone, you will understand better. So in the chart you have seen, you can see a demand zone, broad support level, and a supply zone, broad area of resistance. What we wanted to find are the price zones where supply overwhelms demand and where demand overwhelms supply. The former is known as the supply zones. When the market bumps into a supply zones, the price will drop. Then you know, or you can make money by shorting the market. The later is market demanding zone. With the support of demand, the price will rise. Then you can profit in a long position. If the supply zone is broken, it becomes a demand zone. Pullback test from a demand zone, you can go long. Indeed, how to find supply and demand zones in trading is very important. I will show you 2 steps in order to identify the supply and demand zone. After you have watched how to identify supply and demand zone, you will know the importance that this video will be for you in detail. Number 1, look at the chart and try to spot successive candles. It is important that price moves a lot establish the base, usually sideways price action area from which price started the quick move. Different types of supply and demand formation. There are different supply and demand zone patterns. Some of the more popular ones are shown here. The trend continuation base, the rally pace rally, which is called RBR. The down base down, which is called DBD, and also the trend reversal bases, which are called raise base drop, which is shortened as RBD, and which is also called the down base rally, which is also DBR, and flip zones. These 5 things are including the trend continuation base and also the trend reversal base. They are the most popular used in technical analysis when identifying the supply and also the demand zones. Let me illustrate it to you. This is what you can see as, these are called the trend continuation base. You can see the drop. This is the base, and when you see, we call this is drop base drop. This is DBD. So this is drop base drop. You can see this is the drop, this is the base, and this is the drop. What you see is drop, base, and drop. That is why this continuation is called DBD. And what you see above here, this is RBR, which you can call it rally base rally. So you are now really understanding how the market structure looks like exactly when you learn these things I'm just talking about. You can see the structure here. What you see is trend reversal, trend reversal base. This is rally base drop. Okay, drop. This is drop. So what you will see is, this is the rally. You can see this is rally, and what this rally creates is base, and it will make again drop. So this is rally base drop, rally base drop. So you can see the structure, rally base. This is the base, and this move we will call it drop. So after the market break is below the base, then it will test, and then the entry should be there, and then you can see where the drop should be. So you have understood also the RBR. Let us now find out what we call the dawn base rally. The dawn base rally. What do we really need the dawn base rally? In here you can see the D, which is the drop from the, as this text is down, it means that the market is dropping down. So when the market drops down, what happens is that the market is making a base. So drop base rally, and then the market breaks up and then continues up. So we will get DBR. That is the DBR, and this is the flip, which you will confuse when the market structure is forming, and sometimes this will cause very bad actions, because it starts as demand, the market goes up and then flips again and then makes a supply zone, the breakthroughs demand, and then breaks up. So now demand zone is becoming supply zone and the market is flipping down. So this is called the flip zone. So this is the flip zone. These structures are exactly very popular when it comes trading in financial markets. So if you learn, I might think you will be exactly perfect person. In this here, what you will see here is, this is exactly a gold chart. You can see, what you can see is the base. This is the base, and what the market is always making is what we have seen. Exactly, the demand, the flip zone, all of those things shows what I have explained. So I will make another video about how to identify them, but right now this video is in detail, and I will give you the information first, and then I will explain them one by one. So now the structure of the market is the strength of supply and demand zones are really very important. So how did price leave the level? Because we need to know the strength of the move. The logic that we will get from our mind is, the stronger the price moves away from a zone, the more out of balance supply and demand are at that zone, heavily order is placed, because the price will move strongly. So the strong means price, there is what we call the strongest and also the strong and the weak. When you see that these three white horses moving, there is price gap down from the zone, and strongly moving down is happening from this strongest. And the other strongest, which is next to this, is when you see these conditions, these three conditions, these candles, like these actions, you will see that the price moving down with a big candle and also a small retracement. You can see that there is a retracement, big candle retracement, big candle retracement. This is not very strong, but it is strong. So you can see weak, a price moving down with not so much strength. Candles are coming together. This is weak. So how much time did the price spend at the zone, and the time at level? Which level? The logic, the less time price spends at a zone and weight is there and not moving anywhere, the more out of balance supply and demand are at the level price. And HusniFX price action aggressively entering at this zone at the price levels with the supply and demand zone more out of the balance. The price will spend at least the amount of time at the level. So let us know. Look at this. Look at this. Look at this. You can see what's happening in these three actions. The less time price spends at a level, the stronger the level. You can see here, you can see here, and you can see here. The less time. If the price is moving this level, heavily and not spending not more times, then the price is strong. And when you see that the price is staying this level, it is weak. You see that the price is staying here, it's weak. And you can see that here is the strongest because the price did not wait anymore and it moves down. And you can see that here the price waits a short time, but it's not like this, because here you can see that the price was staying for a long time. So the less time price spent, you can see that there is no more time, it's less. That is what I'm just talking about. So in here, how far did the price move away from the zone before returning back to the zone? The logic, the former price moves away from the zone before returning to the zone, the greater the reward, risk, and probability. So when price comes back to the supply level for our short entry, we have a good idea of where the buyers are at the demand, and also just as importantly where they are not. So we can see that when supply zone is like here, we are having, so entry short is here, you can see where the target should be. When you can see the supply zone is here and we have the target is here, anytime you see that the key zone is just like supply zones and also the demand zones, the previous low is always our target. So that is very clear, guys. So you can see how many times is the price approaching the zone. 1, 2, 3, or maybe 4 times. Freshness of the base first time market or stock retracement or market retracement to the base is the strongest to enter. Always you have to look at every time price approaching the supply zone, it removes supply from the zone and the weakness that zone should be. When the supply and demand break, this is one of the questions I have started. After a zone is tested many times or during a strong move, supply and demand levels eventually break due to the remaining orders being triggered and gradually removed or overwhelming amount of orders in the opposite direction, breaking the level. We need about to know price action when it comes to supply and demand breaks. If the price stays near or at these zones or does not fall much, then there is a high probability that they will break the zone. As a strong move to the zone will break the zone, low volume test to convince the zone, and we need how to enter the demand and supply using the price action, and this is when we wanted to find the SD zone on high time frames, then wait for the price to come to this level. So seeing any acceptance or rejection from this zone on trading time frames TTF, which is any reversal price actions signal on trading time frames into in the direction of the dominant trend is exactly very good. So you always make frame with the trend. Suppose contested downtrend price ready to the supply zone on trading time frame, then any pairs reversal price action signal for an into short. Also notice that the value on these reversals are a low value test is a good sign, and they are highly probability trades. So the tips that I wanted to conclude is that for a day trading, previous day high and previous day low is the supply and the demand. Look price action around there for acceptance or rejection of the zones. Let us do an example. Find the supply and demand zone in a higher time frame. In hourly time frame, we find the zone. Big picture show 1. Whether the trend up or down determines which side we want it to be on, where the big picture support and demand levels are. Guys, we don't want it to long below the supply zone. When price approaching to the demand zone, we wanted to see side of the strength price action for confirmation of zone. Number one, momentum loss decreases the candle range and body, lower wick, and also mix of both red and green candles. In this supply zone, you can see what's happening. In this supply zone, you can see what's happening on this demand zone. In here, the long candle means that the price tried to break down, but failed break up. It was zaked out by smart money, means that the market has gone. And right now, what we need is the price. In here, what you see most of the time, what you see is that the price is spending a time here, but unable to close below the demand. You see that it is spending a time here, but the price, you can see that it's always going up. It does not want it to close below the demand. So why you have to think about that from the perspective from the smart money, that you have to understand the price still has a momentum to go up, but needs to be a patient. On entry on the trading time frames, you should focus on any time frame. In this price, let us look at the black cycles area shows rejection from VWAB. This is the sentiment bullish. So you can see everywhere where you can see the cycle. In this zone where you can see here, what is happening is the previous day high and minus supply zone. You can see that this coming. In the second entry here, low value price action area breakout. You can see at this zone there is a breakout, but what happens is a low value price action area, which is breakout. So the sideways price action starts from here till here. Price action area break outside, trigger from demand zone, and also previous days higher with the value increases upside and then goes up. So what is happening is clear, so you should learn to spend a time and also learn exactly what's happening. Entry signal candle, you should always focus on when you are at supply and demand zone. The entry candles will be bimper, engulfing, and outside candle. These are what will help you. Also enhance this example, trade with the trend always and make a friend with the trend. If index and sector shows positive, then go long if from that dimension. So I think that here in this video I have explained how to trade with the supply and demand trading in detail. In the next video I'm going to explain about technical analysis in detail. I hope you enjoyed the supply and demand trading articles. To get more tutorials, join in my Telegram channel to learn more and clear your doubts. Welcome. It's me, Abdi, HusniFX mentor. Goodbye.